if you can just print trillions of dollars out of thin air, why do you got to raise taxes? I mean, you can just print 3 trillion, 2 trillion, trillion, poof, Powell can trillion. Why you got to raise taxes? And so the funny part is when you break down the numbers and you actually look about how much revenues are actually taken in from taxes is when you have the eye-opening moment and you realize, you go, wait a minute, this doesn't add up. You're talking about spending $3 trillion in another stimulus, not including the 1.9 that was just done, but another $3 trillion on top of that. So you're talking around $5 trillion in 1 year. That's including the trillions that was spent prior to that. So we're getting up, I mean, where are we at? 15 trillion now spent on just inflating the monetary supply at this point. But no, we need, a couple more $100 billion from tax revenue. Like, is that even going to make a scratch? Is that even going to make a scratch on the amount of money that you've printed? Powell, Janet Yellen, this whole cabinet going on right now? Is that going to, it's like, wait a minute. Where is the focus here? And the thing is, they'll start with the wealthy so people can rally behind that. And then eventually you realize, oh, wait, this is just, a slippery slope where it's just raising taxes for everybody. The real scare, though, is when you realize, oh, wait, in 2019, they took in $3.5 trillion in tax revenue. In all of 2019. We don't know 2020 just yet, but in all of 2019, they took in $3.5 trillion in revenue from taxes. So you're talking about raising the revenue stream to, a couple more $100 billion, maybe. What is this going to do? What is this going to do? Because there is word on the street that, this is what's going to cause a sell-off in Bitcoin. It's going to cause a sell-off in here and there. I beg to differ. And I guess this is a good point to say that all of the videos on my channel is just my personal opinion. I could be completely wrong. It's not to be taken as fact, not a financial advisor. Nothing I say is to be taken as financial advice. With that being said, what I think is going to happen is, why would anybody want to sell their assets if they knew they had to pay a capital gain? Specifically in the Bitcoin crowd. Because a lot of the Bitcoin guys, are within that 1 year period and they've made, a substantial amount of money on Bitcoin. So regardless, though, across the board, not getting into the intricate details of this specific hike in capital gains, just any capital gains at all, for that to be a logical argument for a sell-off in the stock market, the sell-off in precious metals, a sell-off in Bitcoin, I find that to be completely invalid. Let me explain. You charge more money on capital gains. I don't even want to deal with capital gains in the first place. It's already a really, really high rate. So don't really want to sell in the first place. But all it's going to do is it's going to, in my personal opinion, entrap people to their assets. It's going to trap them to their assets. And is that going to be a thing to sell off Bitcoin? Like, really? You think that because you've raised capital gains taxes, that's going to get people to sell their Bitcoin? Okay. You're basically saying that if I don't sell my Bitcoin position and just leverage against it, I won't have to deal with this at all. I don't even want to have to deal with it in the first place, let alone if they raised it higher. So that's a positive for Bitcoin. That's also a positive for the stock market. But what gets scary about the stock market is it's so wildly overvalued right now. So you have stocks that are just collectibles. That's what they are. They don't trade at price to earnings ratios that they're ever going to attain. Not even the blue chip ones. They're not going to attain these price to earnings ratios. It just doesn't make any sense. And they're valued in a diluted currency that they diluted far faster than their income rate. They can't even balance a checkbook over there, these economists. You take in here, let me help you guys. Let me help you guys real quick in the Fed and all of these people that think, oh yeah, let's raise the capital gains and we'll make a couple extra $100 billion a year. You spent over 10 trillion. Now it's reaching up towards like 15 trillion at this point, if it hasn't already gotten there. You spent all of that money. Let's say well over 10 trillion and just keep the bar real low, but we all know it's more than that. That money then gets multiplied by the commercial banks giving out loans at will because fractional reserve banking doesn't even exist anymore. But I'll just stick with the 10 trillion number, but really it's a lot more than that. You dilute the currency by 10 trillion in, around a year and a quarter, year and a half, it's probably about 15 trillion. And then a lot more from the commercial banks. But I digress. How does making a couple extra $100 billion do anything? Here's what the real problem is. You can tax the rich as much as you want, but they're not going to sell their assets. They're not going to sell them. They're going to keep their assets, and they're going to have their assets cash flow. And then better yet, they're going to spend that cash flow before you can get your hands on it and reinvest it into the business to buy more assets that produce more cash flow. If you know the way the money world works, you realize that this is just, it's smoke and mirrors. You can increase the tax rate on the rich to 100%, and they're still not going to sell their assets, and they're still going to cash flow off their assets. That's just the way the money world works. And I didn't learn that by the college system. I didn't learn that by the education system. I learned that by just reading books on my own. It's really wild the way that works. The Rich Dad, Poor Dad book is a great one if you haven't read that, from Robert Kiyosaki. One day I would love to talk with Robert Kiyosaki because he's somebody that I agree on with virtually everything. Just a great guy. But yeah, his book was a game changer for me. But that's what boggles my mind is it just seems like a publicity stunt. Just like when Elon Musk, said we're going to accept Bitcoin now, I saw that as a publicity stunt because if I pay for my Tesla in Bitcoin, I have to pay capital gains on that. So if you buy something with your Bitcoin, just a quick crash course in the capital gain situation with Bitcoin. If you buy something with it, you have to show how much you paid for that and how much that item costs. And if you are at a profit, based on the cost of that item, you now have a capital gain. The first Bitcoin I ever bought was pretty low. So if we're going off that, I would have a very substantial capital gain if I bought a Tesla with my Bitcoin. However, if I get a loan against my Bitcoin, I am in a different situation. The reason I bring that up is that was like a publicity stunt, and it was a great one. It got a lot of exposure to Tesla. It's like, wow, they're going to accept Bitcoin, and they're buying Bitcoin. And this is like, they're basically, if you do decide to do that, you're basically just getting, maybe you're up a lot. Maybe you're up a lot in Bitcoin, and it's just like, I'll take a Tesla. Why not? I'll deal with the capital gains and everything. But if you're financially savvy, you know that it just doesn't make sense to do that. You're basically just letting them cut out the broker houses and paying fees to accumulate Bitcoin. They get to get Bitcoin on the cheap by them accepting Bitcoin for their cars. So it's kind of like free publicity and an easy way to accumulate Bitcoin for them. That's what I see this whole raising of the tax rate. I see that as a publicity stunt. It's not going to do anything. It's not going to affect the bottom line when you're spending $10 trillion per year and trying to do more than that. I mean, we're talking about increasing the monetary supply by like 30 to 50%. It's already, I believe, at 40% they've increased the monetary supply. So it's like, okay, you had 100% of money and you added an extra 40%. Now you're reaching towards 50, 60% more. And we're supposed to get behind that. Oh, if you raise taxes, it's going to help us. No. You want to know where it really hurts? This is where it really hurts. And this is what is the sad aspect of it is while you are in the... It's why I make these videos, because it really bothers me to my core. If you are in the lower class, middle class, and you think that raising the taxes on the rich will help you, first, maybe you're right. Maybe you're right. Maybe the top 1% of the world has way too much money and has to be more charitable. Maybe there needs to be an outcry, towards billionaires to be like, hey, be more charitable, help the homeless, do this, do that with your ridiculous amounts of money. That's one thing. But while you're focused on that, keep in mind that all of your savings, all of your wages, the money that you're being paid in has been dramatically diluted. That is far, far worse than the smoke and mirrors of saying, oh, increase the tax rate. Regardless, we're talking about a few $100 billion. If you're increasing the monetary supply by 50%, 60% in like a year time, less than 2 years time, That's going to cost, your gas is going to cost more money. Your electricity bill is going to cost more money. Everything is just going to be through the roof. It's going to cost more dollars because it's diluted. It's that simple. It's like you now, everyone that was a good citizen that was like, I'm saving in my 401k, you know, I am going to, oh, by the way, if you sell your 401k, that's going to, there's all these different fees and the gains taxes and all of that. So you're kind of stuck with that. But this, on top of that, with this capital gain, extra capital gains taxes, it's like, okay, well, you imagine you don't want to sell your stock, but your stock is wildly overvalued and you don't want a capital gain. So you kind of are entrapping people into their assets. So what assets do you choose to be in right now? Me personally, silver, Bitcoin, platinum, palladium, gold at the end. That's where I want to be. It's that simple for me. It's normally I never was actually a person that would be diversified. I've always thought diversification at this point in my life was like a weak way. You don't really get real money by being diversified in a bunch of blue chip stocks or something along those lines. In my personal opinion, you do it by really doing your research about a select few things and then going big into those things. Maybe I have an appetite for risk, but that's just how I feel about it. But in regards to, you know, being entrapped by this, you don't really want, if you have been working for a tech firm for a long time and you have a lot of this tech stock, say you worked for, I don't know, PayPal or something, and you have a lot of PayPal stock, and they increase the capital gains on you. I'm just saying, like, hypothetically, I don't know if this specific person is going to get affected by this. I'm just talking about it overall. If you've increased capital gains overall, you're not going to want to sell your stock. And then you're kind of in a tough position, because imagine another 2007 happens, but you didn't want to sell your stock because you were afraid to pay a capital gains because you were kind of stuck to that asset. That's why I don't feel like this is a damaging thing to Bitcoin. It's like, okay, well, they're giving loans against Bitcoin, right? Yes. And it's more institutions are doing this. So it's like, if anything, you would want to, your options on where to put your capital is so limited. But there's one thing for certain. The one certainty is that if you are holding dollars in a bank account, you are holding an ice cube that inevitably will be water. And that's due to their excessive money printing. So yeah, point your finger at the very high wealthy, you know, crowd and say, hey, you need to be more charitable. You know, if they're going to increase the taxes, okay, you know, great. They're going to do that to the uber rich. They're going to increase their taxes on them. You know, what that ends up doing is relatively nothing. In my personal opinion, relatively nothing. When you're printing over $10 trillion, almost $15 trillion, probably more than that at this point. I don't even know what the numbers are. Trillions just get thrown around like hotcakes over there at the Fed. They have $1 trillion hotcake days every Monday, I think, over there. But that's pretty much what goes on. And you're talking about, oh, we're going to make an extra 100 billion here. You just diluted the whole monetary supply by almost 50%, and you're talking about increasing it from there. And we're worried. We're rallying behind. We're supposed to be okay with, oh yeah, that's a big deal. It's not a big deal. It doesn't do anything to the grand scheme of things. And what it really does is distract from the fact that these money drops into the economy are making the middle class and the less fortunate actually become even less fortunate. Because you want to know what the wealthy are doing? The wealthy are just not selling their assets and making them cash flow. It's that simple. So meanwhile, while they think they're getting at the uber rich, you could tax them at 100%. They're still going to keep their money parked in assets and never declare a capital gain and just cash flow off of their assets. That's just the way the game works. While the people who are working very hard for their wages now, and I've said this time and time again in my videos, you have a situation that is just, it's dreadful, where you're being paid in a currency that they've diluted by 50%. In my personal opinion, that's equivalent to, like, okay, you have say you have 100 grand saved up. Now that's been diluted down to 50 grand. That's just the way I look at it. It's just getting diluted and diluted and diluted. And since the Fed's inception, I believe it's 1913 until now, the dollar's lost 99% of its buying power. And yes, that's a real stat. Again, these are just my personal opinions. But to finish that statement, it's like, okay, you have a wage that if we're in a rough time right now, and now your boss, you know, the person who's in charge of the company might have to be paying more taxes. So they're not going to be looking to give you a, you know, a raise. They're probably paying more taxes now. So they're going to be like, okay, well, wages are probably going to stay the same for the middle class, right? So the same, if not, you lose your job and it goes down. So we're talking about a deflationary wage, you know, where the wages are the same or going down. But the problem is say you've been making $3,000 a month, and that's what your wage is, $3,000 a month, $36,000 a year. Well, in this scenario, you are being paid the same $36,000 per year, that same $3,000 per month, but you're being paid in a dollar that's been wildly diluted, where your gas is costing more dollars, your rent is going to cost more dollars, everything is going to cost more dollars due to inflation because they diluted the monetary supply. So while we are told, yeah, get the rich over there, get more taxes from them, they diluted the entire currency that we are paid in. And that's going to make people sell out of Bitcoin? Sure, because I'm really anxious to go sell my Bitcoin right now and declare a big capital gain. And take what? Their dollars that they diluted? Maybe if I'm going to sell it and put it into silver or something, but why would I do that? If I do that, I just instantly take a big hit and take a big, 30-40% hit. And then I might as well just keep both and accumulate both. It's like it. Maybe I'm just a little bit out there or something, but it boggles my mind that it seems so simple, but it's in my personal opinion, it's a distraction. It's a distraction from the fact that the dilution of the monetary supply, the dilution of the currency has essentially ruined. It's ruining the middle class. And it's ruining those who are working really hard for a wage. All of the Americans that are trying to save money and put it in the bank, those dollars are diluted. So what now? We're going to get distracted by a couple $100 billion when they're. I'll keep repeating myself, but I hope that there was some useful information here. Overall, if you want my stance on it and how I feel about it, you know, I think that the uber, you know, rich, the 100 million, billions, you know, be more charitable. Hopefully you get guys like Elon Musk that are using their wealth to change the world, you know, but guys like Elon Musk, they're not going to want to sell their stock now. Now they're not going to, if you want to increase gains taxes on these guys, they're not going to want to sell their positions. So guess what? You think you're going to get more revenue. You know, this cabinet, I don't want to get political, but you think that you're going to get more revenue from increasing the taxes. It's like, no, they're just not going to sell now. And they're going to get loans against their assets. So do you think Elon Musk he's rich on paper? He hasn't sold his Tesla stock, and you got to give him credit, like 30% of Tesla, and he hasn't sold any of it. Pretty wild. I think it's like 20-30% of the entire company he still owns. So what he does is he gets loans against it. And he hasn't declared a capital gain. But if you increase the capital gains on him, you think he's going to want to sell and give you revenue to the country? No. He's not going to sell it. He's going to keep it and leverage against it. I hope that this sheds a little bit of knowledge on the situation and how I feel about it. I think the best policy is, like I said in the last video with the stimulus package, what I thought about the stimulus package, it kind of ties into what this is here. The best thing they could do is just get out of the way. That's would help the economy thrive. Like I said, with all of the stimulus checks that they've printed and all of the money that they've printed out of thin air, they could have essentially just made people not have to pay taxes for 3 years, 4 years straight, maybe even longer. And what would you rather have? We're paying them over, you know, on the Hill. They're getting paid very, very well. They're getting paid great salaries over there. And they can't even figure out how to spend this money, how long it's going to take, how much it's going to be. And by the time it gets to the citizens, that money's just dwindled away. And you want to know what's left for the citizens? They might get that $1,400 check, but they get a big old bill behind them. And you know what's in front of them that we just can't see right now is this hyperinflation. That's the real tax on us all. So yeah, you know, I personally find this to just be a distraction. I find it to be a distraction, and that's my outlook on it. My outlook, to just summarize what I've rambled on, you know, and repeated myself probably 10 times. I know I do it. I get it. This is not a important event, in my opinion. It's not something to think that it's going to change, you know, make people sell off Bitcoin, sell off silver. So they're going to not sell their positions. And if you're in the stock market right now, I'd be very weary, because if you're trying to force people to hold their stock and not sell for a capital gain, well, then what happens to the whole system if the stock market crashes? What happens if the dollar index crashes? They lose reserve currency status, and all of the stocks are valued in dollars. And you were scared to sell your stocks because you didn't want to declare a higher capital gain. And meanwhile, the entire stock market is diluted by the dollar that it's valued in. Just a theory. You would think that you would just want to find ways to park money in universal assets, decentralized assets. And a decentralized asset, in my opinion, is silver, is platinum, is palladium, is Bitcoin. This is universal money. You know, universal collectibles, universal assets, decentralized assets. These are the places you want to be right now, in my personal opinion, because it's just a waiting game, really. And if they're going to keep dropping care packages of money and thinking that, oh, we're going to raise the taxes and that's going to help anything, it's like, does anybody study the bottom line here? Does anybody know how to balance a checkbook? And we look at this guy Powell, like he's like, oh yeah, everything's fine. No, it's not. It's not fine at all. They've spent so much money, and they talk about the tiniest little thing making a difference. It's like, what is this? It's ridiculous. I don't even have an analogy off the top of my head to come up with that it's similar to. It's just unbelievable to me. It's a non-event. What's the real event is diluting the dollar by almost 50%. And what are you going to do? You know, multiply the dollar, the monetary system, by 100%? You're just going to double it, triple it, quadruple it? What do we do? And we're just going to think, oh, okay, if we do things like that, it's not going to affect the monetary supply. It's not going to affect inflation. Anyway, it's pretty late here at the warehouse. I actually was doing some upgrades here. I got this new fancy mic. You know, I feel like they got the ultimate Joe Rogan setup here. And I also got if you've noticed, I got my maglev light bulb over there. I'm feeling real fancy. I'm sure Tesla would be proud of me. But that's the video. That's my little rant that I have on this subject. It's, in my opinion, just smoke and mirrors. It's not something that I would. It's pretty mind-boggling that people think that would be a sell-off event. I'd understand regulation news, something along those lines, and you know that could happen, but not increasing taxes would not make people want to sell off their Bitcoin. It would just make them never sell it. That's my personal opinion on it. Hope there was some valuable information in this video. If you do find the information valuable, I got my fancy like pillow. You know, this really pushes it over the edge. If I just say like that, it's just, you know, maybe like it. But if you see the pillow, you know, smash the like button, please. I'm just kidding. But seriously. And if you want to be part of the channel, by the way, we just broke 20,000 subscribers. That's just wild to me. Thank you all so much for being here. See you at the next video. Signing out.